Stock markets are still on the rise, with further record highs in the US, but political uncertainty has Australia lagging and emerging markets are under pressure. A quick update on August's market trends and the outlook for the month ahead. The news that the US and Mexico are set to agree a bilateral trade agreement has helped stocks around the world, showing the US does have capacity for compromise on trade. This briefly helped emerging markets as well as advanced economies. However, despite this, the divergence between these two has been increasing. The US S&P 500 and Nasdaq indices have just hit record highs, extending the US bull market to 9.5 years. But in contrast, many emerging markets are still well down from January's highs. Some of this effect has come from Turkey, where US sanctions drove a collapse in the Turkish lira, and Argentina's central bank has just increased their rates to 60% to try to stabilise their currency. China's stock market has also been struggling with the hard line from the US on trade tariffs. And while the Chinese fiscal package to cope with this is in place, the chart shows a steady decline for Chinese stocks since May, when early attempts to avoid a trade spat began to fail. Australia's stock market had been well correlated to China last year, but this correlation has broken down. Our ASX 200 index hit fresh 10-year highs in the last few weeks, although the change of Prime Minister and associated confusion and uncertainty did push markets lower for a few days. However, the fundamentals of low interest rates, elevated corporate earnings, and reasonable jobs growth are still in place. So, we'll see how business confidence copes with these competing factors, which should be helped by the Aussie dollar staying well below 75 cents, having hit an 18-month low at 72 cents last week. This remains good news, with the recent downtrend still in place, helping exports, despite reasonable economic data throughout August and despite the Reserve Bank remaining upbeat. This month, as we enter spring, the drivers of our economic outlook will be the GDP growth data due out on the 5th of September, where growth should come in around 3% annualised, despite the severe drought being estimated to take roughly 0.5% off the growth rate. And then the jobs data out on the 13th, where we expect the unemployment rate to continue to remain below 5.5% and trend over the rest of 2018 to 5%. Further news on trade and emerging market stress will keep driving offshore markets and exchange rates. But for now, offshore demand for Australian exports remains resilient. And finally, it's the 10-year anniversary in September of the global financial crisis earning its name via Lehman Brothers' demise. Back then, the Aussie dollar was around 90 cents and our official interest rates were up at 7%. The world has changed a little since then, but the memory of these events may see a rise in volatility. I'll see you soon for the next market update from Bendigo Bank.